Okay, not my favorite. Okay, so we've got, next up we have to calculate, okay, dividends paid. Okay, so financing, okay, do we see, okay, nothing on the income statement is gonna be for financing. Okay, we've got this dividends payable here that decreases, okay, but we wanna know, okay, the actual dividends paid for this. Okay, this gets, okay, a little tricky. Okay, so dividends payable, and then we've got the loan payable. So maybe we'll start with the loan payable first. Okay. Okay, so what's going on with the loan? Okay, loan payable goes from 125,000 to 108,000. So right, that's a decrease. Okay, so what would be, okay, think of the journal entry here. Okay, if we're decreasing, okay, the loan we can debit. Okay, loan payable, and then what would we credit if we paid it off? Cash, perfect. Okay, so what was that, 17,000? Yeah, okay. Okay, so we see cash going down 17,000, we can go, okay, 17,000 decrease. Okay, now the fun part starts, okay, with the dividends. Okay, so first off you have to start with, okay, if we want to be able to determine the amount of dividends paid out, where do dividends get paid out of?
Retained earnings.
Retained earnings. Okay, so I'll just go retained earnings here. Okay, and what was our retained earnings balance to start? 129, right? Okay, so we have 129,000 retained earnings balance. Okay, and then what was our, okay, our beginning was 129, ending was, right, 246? Okay, we get 246. Okay, so how do we, okay, what's the formula for retained earnings? Okay, to calculate ending. So beginning,
Add net income, subtract dividends.
perfect, okay, plus net income. Okay, and then subtract dividends. Okay, this would be dividends declared. Okay, so what was our net income? What did we have, 212? So we end up with 212,000. Okay, and then does it tell us what dividends declared is? In this case, no. Okay, so that's what I said, like this whole question is kind of a puzzle. Not my favorite way to do it when we're just learning it, but we've got dividends declared. We don't know what that is, but we know we're ending. Ending retained earnings, okay, is 246,000. Okay, so if we say, okay, 129 plus 212, okay, we get 341,000, and we want to get to 246. Okay, X should equal what? Okay, I think 95,000 I had. Okay, so now we know what dividends declared is. Unfortunately, we still don't know what dividends, okay, we actually paid out though. Okay, so we'll start off. Again, I promise I won't put this level of question on a midterm. Okay, but again, we got dividends payable. This is a liability account. Okay, and we have dividends payable starting. Okay, we've got 22,000, right? We need dividends payable. Okay, and then we've got ending ending,
17,000.
how much was it? 17,000. Okay, begin, okay, and this is ending. So we declared $95,000 of dividends. So when we declare a dividend, okay, the journal entry is dividends declared. Okay, 95,000. Okay, and then we're gonna credit dividends payable because we typically don't pay out the dividend instantly on the day that we declare it. Usually declared becomes legally obligated to pay it, and then usually it'll say the dividends that have been declared will be paid on whatever, usually a few weeks later. Okay, so our dividends payable liability is increasing. Okay, so we credit dividends payable, okay, by $95,000. Okay, so here we're gonna say we declared 95,000 worth. Okay, this is, okay, dividends declared. Okay, and then that ends up being $117,000. Okay, so then if we end up with 17,000 ending, okay, dividends payable, okay, but we have a balance here of 117,000, then what must we have done? Must have paid out, right? Okay, the difference, $100,000, okay, dividend paid. Okay, now that balances. Okay, that's, again, okay, a lot of steps to get there, and again, it takes a really good understanding of accounting to essentially be able to walk through that, okay, in a reasonable amount of time. Okay, because again, the amount of dividends you declare and the amount of dividends that are payable, that's not actually being paid out, right? We want to know the actual dividend paid. Okay, so the journal entry for that, okay, we're gonna debit, okay, we can move it over a bit. Okay, dividends payable, okay, say 100,000. Okay, and then we're gonna credit cash, okay, for 100,000. Okay, because again, we're paying that dividend out now with our cash balance. Does anyone remember our temporary accounts? This is just one other step. We close out our revenue and our expenses and our dividends at the end of the year. So say if we also have this account, okay, declare dividends or dividends declared. Okay, we declare dividends of 95,000. Okay. Now, if we wanted to close out dividends declared, what would we do at the end of the year? So we've already made our statements.
Debit retained earnings 95,000 and credit dividends declared 95,000.
Perfect. Okay, so debit, okay, retained earnings, 95,000, and then we can credit dividends declared 95,000. Okay, that's why we don't see dividends declared anywhere on the financial statements.
What is the dividend declared and dividend paid?
So dividends declared, okay, this is an account saying we're declaring that we owe $95,000 of dividends to our investors. Dividends payable means now we owe a liability to those investors for $95,000. So any amount that we declare is automatically gonna be dividends declared. If you don't pay it, then typically it's gonna go to dividends payable. This is almost the entry every time that you see dividends being declared.
Why is this dividend declared different from dividend paid? Is it just the company declare a dividend to pay to
Yeah.
its shareholders?
So that's what, just because it's declared, okay, when we pay out different amounts, we're gonna have a different amount from being declared and being payable. So that's what by us paying out the dividends, it's gonna reduce our dividends payable. Okay, but our dividends declared stays the same until the end of the year when we wipe it out to zero. So that's why you're gonna see a difference between dividends declared and dividends payable, because this will be the total amount for the year, and this will be a running total of dividends owed to our investors. Okay, so that's what we wanna know, how much, that's the tricky thing, we wanna know how much dividends we paid out to our investors. Well, we don't know until we work through and see, okay, how much did we declare then? Usually it'd be nice if it told us, but it didn't, so we had to manually calculate that. Okay, dividends declared, the journal entry is always declared and then becomes a payable. So that's why we added it to dividends payable, because once we declare it, we owe it to our investors. Okay, and then it's saying if we've got the beginning amount of dividends payable plus what we declared and the ending, okay, then from there we can see how much did we actually pay to our investors. Yeah.
So the end goal is just to find out how much we actually paid in dividends?
Yeah, so that's what we did, this whole rigmarole just to see, okay, how much cash did we actually pay out in dividends this year? Okay, because unfortunately our income statement and our balance sheet didn't tell us this. Okay, I'm sure using accounting software you could just press a button and it would tell you this, but if you want to know the theoretical way to do it, that would be, okay, how we would do that. Okay, so loan payable was 17,000. Okay, the next step was, okay, what was it, dividends paid?
So at the end of the year, we always have the closing entry for dividends declared.
Yeah, so at the end of every single year, if we have any balance in dividends declared, we gotta bring it to zero.
So we always have the like balance for dividend declared.
Yeah, if we've declared any amount of dividends, it should be a debit balance, okay? And then at the end of the year, we just want, like this would be dividends declared for, say, 2024. So then, if we wanna know dividends declared for 2025, that's why we have to wipe it out to zero, and then we start fresh.
So it's
So-
not automatically offset with dividend payable?
No, it's not going to necessarily be the same, because dividends payable, this is a balance sheet account, meaning that it's a liability, and we don't wipe out our liabilities at the end. So if we don't pay out the dividends we said we're going to, they don't go away.
Mm.
Okay, they're gonna stay here until we actually pay them out, or I guess that's the only case that we could do so.
the dividend payable 22,000, is it flat from the last year or roughly flat?
Yeah, so this dividends payable beginning, that's the amount that we've owed from last year or from prior years. Okay, so that's what it didn't go away, it's saying that at the start of whatever the period is, okay, we owe 22 grand in dividends. Okay, at the end of the period, now we only owe 17,000. Okay, whereas dividends declared says, okay, you declared them, okay, for this year, we just wanna know how much we've declared, we don't care if it's been paid or not, or the dividends declared. Okay, once it goes to zero at the end of the year, okay, we start fresh, okay, because in 2025, we've declared $0 in dividends so far.
It's the same as all our expense and payable accounts. like
Exactly.
Wages or.
Yeah,
interest.
any type of expense. So if we went back to, was that chapter 3, we talked about temporary accounts. We close out revenue to income summary, we close out expenses to income summary. Okay, the difference in income summary goes to retained earnings. Okay, here we can just skip that step, and it plays nicely that we can go ahead and just debit retained earnings for the amount and then close out dividends. Okay. So yeah, long story short, okay, we paid $100,000 in cash for dividends. Okay. Let's add that up. Okay, 100, okay, I don't need a calculator for that, 117,000. Okay, this would be, okay, net cash used